ladies, welcome to Monday Night Mojo. I am your host for this evening, Christina Collett, Senior Sales Director with Mary Kay. Thank you so much. I'm coming to you from Lidditz, Pennsylvania, the coolest small town in America. Woo! Come visit us in Amish country as soon as you can. And I'm just excited tonight to talk to you about your taxes. Woo! Don't you get excited? Ooh, most people are not excited about taxes because, I mean, you just see all that getting sucked out of your paycheck every 2 weeks, going here to here to here to here. And of course, you know, you've heard that we work until about April 15th, tax day, to actually pay our taxes before we get to actually keep the money that we work so hard to make, because the government takes, for most of us, if you are only an employee of somebody else, they are taking 30 to 35% of your paycheck. Get excited, right? No, that's not exciting. What is exciting though, if you're watching this and you have an in-home business, like Mary Kay, you can take lots of tax deductions, and that tax return that you get, if you get a tax return, you're going to get more in your tax return, because a lot of the expenses that you're paying for anyway that we're going to talk about tonight, they come back to you. They can now be claimed as a business expense, okay? So they can come back to you in your tax return. If you are used to paying taxes, if you're in that tax bracket where you're paying taxes to the government at the end of the year because of investment gains, or 401k, or between you and your spouse you make over a certain amount, then that's not fun either, right? Nobody likes to pay more than they've already paid all year long, but that can actually reduce down what you're having to pay, okay? So you have to pay less. So those are some of the perks of having an in-home business. Just to break it down, entrepreneurs, people who own businesses, only pay about 15 to 20% of their taxes of their income, 15 to 20% of their income to taxes. Whereas, generally speaking, like we said, an employee, you're paying 30 to 35% of your income in tax. So it's a huge difference. That is up to 20% savings that you are now allowed legally from the government because you have an in-home business. So congratulations, pat yourself on the back. Woo! You are a smart cookie because you have an in-home Mary Kay business. So let's talk about all the different deductions that you get to take as an entrepreneur. Okay, and this is a fun list. You probably want to jot these things down. And just to show you, you might want to have like a little box to throw receipts in, your sales tickets in, and in my like little catch-all box is the little piece of organizational heaven called your 12-month accordion folder. So you definitely want to have one of those to keep track of all the receipts that you're going to keep from now on until the end of eternity. So this, and I'm speaking, but I know some of our directors were taking a tax class, and it was suggested that you get a 32 file folder and, track everything divided up. But I'm just going to teach you the system. I think it's really manageable for consultants. There's some other things, as you grow into, there's some additional expenses that you get to write off as a director, but I'm just going to speak to you as a business owner if you're just a Mary Kay consultant tonight. And I think a 12-month accordion folder will work beautifully for you. And so you have the labels by the month, January through December. This is my file box from the previous year, from 2016. So in here, we'll take January, or just February because it's handy. So you put all of your consultant order forms, order receipts from any product orders that you made. That's all 100% a tax deduction because it is an expense for your business. I also have all of my sales receipts from everyone that I sold product to is in there because that's something that I want to track. And then I have envelopes. Sometimes I just have a catch-all February 2016 envelope. So all the receipts from that entire month get put in here, and then I will divide them up. So some deductions that you definitely get to take are any postage, mailing out. Now, if your friends and family are also people that you send Christmas cards to, yes, you would be able to deduct the cost of your Christmas cards, or a portion of, a percentage of those Christmas cards that you mailed out to people for the holidays. If any of the, whatever the percentage are your customers or your team members, then that is a deduction. But postage generally is shipping costs, of mailing product to your customers, anything related to that. Also, advertising, like if you sent out a couple days ago on the 17th was our deadline to send out our lookbooks to our customers through the preferred customer program. So of course, all that's a tax deduction. That's advertising for you for your business. There is any sales aids, Section 2 product that you ordered, that's all in your sales tickets as well, all of that. Any rolly suitcases or anything like that that you bought, anything that is obviously related to Mary Kay or says Mary Kay on it, that that's going to be a deduction. Meals and entertainment is one of my biggest ones and my favorite ones. So if I go out to dinner with a girlfriend and Mary Kay comes up, or I'm bringing her an order, or I'm going to share a little bit of new products with her, or information about the opportunity, or if I'm going out to dinner with my mother-in-law, who is, hi Janine, who is a consultant in my unit, or my own mother who's a consultant in my unit, lots of family members are either customers or team members. So that meal, the receipt from that meal is going to go into this 12-month accordion folder, and guess what? I'm going to get to write that off, and that's going to come out of my taxable income. It's going to reduce my taxable income. Even vacations. So I go on vacation with my entire family. Again, my mom's a consultant in my unit. My mother-in-law is a consultant in my unit. If my sisters go, or my sister-in-law, they're usually customers, so that can be a write-off too. So I write off 50% of every vacation. And definitely if I'm doing a little business while I'm there, like I had a wedding in Delaware with my awesome customer, Sade, back in June. So we took a long weekend. We went to Delaware, and guess what? That was a business trip, because I left and did makeup for a wedding while we were up there, and we were able to write off that expense. So be smart. Some people would say, oh my gosh, you like work all the time because you have a business, because you're working wherever you go. Well, maybe, or it's really smart to be able to have a job where you can work wherever you go, because everything can be a tax deduction, and it's really fun to meet people all over the place and not have that limitation, and yes, be able to do some work sitting by the pool while my kids are playing in the wave pool or whatever, and not have to be chained to a desk in an office building. I did that for a few years, and it was not fun. So I much rather have the freedom and flexibility to work whenever I want, wherever I am, and have that be a deduction. So that's fun for me, and hopefully you can figure out a way to work smarter this year and not harder, and be able to roll some of those fun vacation-y things that you do with your family and make it a business trip, okay? It's really not hard to do that. So those are some of the fun things. And of course, mileage on your car. Oh my gosh, this past year, the government is going to pay us for 2016, 54 cents a mile. And I was listening last night, I don't have a dollar bill. Just imagine this is a dollar bill, and you're going to take a dollar bill to your steering wheel of your car, and it will help you start tracking your mileage, Mary Kay ladies, because anytime, if you're going to work and you're delivering a product, and that is a tax deduction for you, that mileage on your car. I have to check. We'd have to check for sure. I think it's either you get only one way or two ways. but I think it's really the mileage both ways. So your total mileage of that trip to get you there and to get you home, think about your weekly meeting. Or think about if you travel kind of far to get to our January jumpstart that we just had, and we traveled up to Harrisburg, Pennsylvania. Or we've got career conference coming up on March 24th right here in Lancaster. I hope you're all planning to come. March 24th to the 25th. It's a Friday night. We spend one night together in a hotel. We have lots of fun. We eat dinner together about 5 o'clock on Friday, and we hang out, spend the night, have classes all day on Saturday, and then you get to go home about 4:30. So it's just about 24 hours that you can gift yourself, and guess what? That would all be a tax deduction. Any educational workshop or training, your weekly meeting dues, if you go to your success event, that $5 a week, that's all a tax deduction. So you keep track of that. But anyway, back to the mileage, tape a dollar bill, because about 54 cents a mile is about $1, right? So if you are going somewhere with product delivery or going to go to your meeting or wherever and you're not writing down your mileage, you might as well just let that dollar bill blow out the window because you're not tracking it. That's money in your hand that could be coming back to you in your tax return. So definitely track your mileage. You can just get a little notebook, put it in the console of the car, and anytime you're going anywhere that can be Mary Kay related, then you want to jot that mileage and your ending mileage, the date, and where you're going, and that's it. It takes like 3 seconds, and you can have all those extra dollars back in your tax return. Okay, so we talked about all of that. Okay, so my office, you're seeing my office. This office, Jeff told me, is about, I think he said 200 square feet or something like that. So 200 square feet, I do not use this space for anything else but Mary Kay. So you have to kind of have an exclusive space, okay? So that's what the government wants to know. Is this space, you know, you can say your dining room table if you're not going to have dinner at your dining room table. Like, really, I could. My dining room is in there, and I hold facials there, and we eat 95% of the time, we eat in the kitchen, okay? But for holidays or every once in a while, obviously, I'm going to use my actual dining table. But so I could probably technically figure out how to count that space as well. But definitely 100%, this area that I'm in right now, 200 square feet, is my office space, okay? And so that percentage related to the total percentage of my house, let's say it's 25%. I get to write off, this is so cool, you guys, write this down. Oh my gosh, if you're not claiming your house deductions and you have an in-home business, and you got to find an accountant that's done, I've heard at least 50 to 100 Mary Kay type, in-home business type tax returns for people. Do not just trust Joe Schmo who's been doing your family taxes for the last 25 years. No, do yourself a favor and get a real tax accountant who knows how to claim deductions for in-home businesses. It is not a lie. Sometimes they'll say, oh, you don't want to claim that in-home stuff because that'll make you get audited. Good. My dad always said, if you don't get audited, that's the real problem, because you're just paying the government way too much money. They're happy with all the money that they're getting from you. He's like, it's no big deal to get audited. He's like, most of the time they just want, maybe they go through your records, maybe they want a little bit more money. He said one time your mother and I got audited and they owed us more money. So we took their check happily, and then we were on our way and we had lunch together and we made it an afternoon. So don't be afraid to get audited. You know, just keep good records. And that's not a big deal. You're being honest. It's not a big deal to get audited, okay? So don't be afraid. You need to be claiming all the deductions that you possibly can. So anyway, 25% of this space, or my total house, is this space. So I get to write off 25% of my Wi-Fi bill, my whatever we have, DirecTV, whatever gives us our Wi-Fi, cable, phone, blah, 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 all that. 25% is a write-off. 25% of my electricity, 25% of my water bill, 25% of, guess what? We just put in a new stamped concrete patio on the back deck. 25% of that, because that leads into my home office. That is a deduction. This whole built-in shelf back here that cost tons of money, that was that was 100% a write-off, because that's 100% for my business. So any upgrades that you do to your house, a portion of the remodel that we did to our kitchen. I mean, we put in a brand new kitchen and got to claim 25% of it as a tax deduction. My cleaning ladies are a tax deduction. Childcare for my kids when they go to childcare, or I have to get a babysitter and it's a business related event, guess what? That's a tax deduction. You don't get to claim your childcare if you're just sending your kid to daycare and you're an employee of somebody else. You know that, right? So, oh my gosh, childcare is huge. So you can definitely deduct a portion of that if you can show that it's related to your business. Okay. Freight, advertising, any equipment. You want a new printer. You want a new tablet or laptop. You want a little video camera, a webcam. You want anything like that that can be related back to help you do your business more efficiently and more effectively. That is going to be a deduction as well. Oh my gosh. So, travel. I already kind of talked about travel with the vacations, but oh my gosh, take a trip and pass out some business cards and maybe treat somebody to a facial, and your whole travel expense is now a business expense, and now that money is coming back to you in your tax return. Like, that is so awesome, you guys. Otherwise, guess what? Just light the money on fire. Light it on fire, you're never going to see it again, right? Oh my goodness, take every deduction possible. It's so awesome. Any other expenses not listed? Ooh, your beauty coat, your red jacket. Those of us, our sales director suits, and dry cleaning on those items. If you have a red jacket and you get it dry cleaned, or if you have specific a skirt or dress suit that you bought specifically for Mary Kay, and you only wear that attire for Mary Kay, you can write that off as well. Insurance on your product if you've purchased, which is really smart to do, because you know that, let's say you have all your products in the back of your trunk because you're just coming home from a party and somebody rear ends you and they smash your rear end, clear up to your back seat, thank God you're okay, but now all your product is smashed in your back trunk. Okay, done, busted open, not usable, not sellable. If you don't have that insured, it's not going to be covered under your car insurance. And I know this because I did auto claims for 3 years. That is not a part of the car. Those are items put into the car. So it's not bolted into the car as part of the car. So that means it's not covered under the car insurance. So you have to have separate insurance on your products to protect them. That is so smart to do. Please do that. It also protects you from liability. This is the story we always hear. Consultant walked into her customer's home. They just had new wood flooring put down. The consultant didn't take off her shoes, and she had a bad heel, and she put divots all through the customer's new hardwood floors. Well, the customer brought a suit against her to replace the floor. And if the consultant doesn't have insurance, guess where all that, you know, $20,000, $30,000 for a new floor is coming? That's going to come out of her pocket because she created a situation in the home of somebody else. So having some product insurance is really smart. You guys, it's like $65, $75 for up to $5,000 worth of product insurance. And plus that covers you for so much more liability, maybe up to $50,000 liability in someone's home, plus $5,000 on the actual product itself. That's way worth it. And it's like $65, $75 a year. And that's through Pro Insurance Managers. And you can get that right on our Mary Kay in Touch, Mary Kay in Touch, MK Connections. So check out insurance. Really smart to have that on your product and just for yourself as you're going in and out of people's homes. Really smart to do that. Your personal use and product log of the wholesale cost of the Section 1 products used for your personal use / demo. Do you know that you're a walking billboard and that every product you put on your own face because you're a Mary Kay independent beauty consultant is a deduction on your taxes because that's advertising? You're a walking billboard. Vogue. Wear it. Wear it all. Wear it all on your body. Wear all the perfumes. Everything you wear. Get your husband wearing it. Get your man, and all the Mary Kay products. All that anyone in your family uses is a demo product and is personal use, and that's a deduction for you. Is that crazy or what? Oh my gosh, that is awesome. So awesome. I love taxes. I love having an in-home business. Awesome. Of course, labor too, if you have someone helping you out in your home for any reason, an office assistant, this and that, those fees, if they claim it on their taxes, you can claim it also, but you kind of have to watch that. Talk to an accountant about, there's other details in with that. Again, any home office expenses, demo product, telephone, your cell phone bill. You guys, if you are not right, I write off 95% of my cell phone bill. Guess how much the bill was last month? Because we went over the overages. It was nearly $300. But normally it's only $150. Okay, that's because the kid got a hold of my tablet and decided to watch YouTube all the way home from some trip, and I didn't know she was on it. Blah, blah, blah. So we went over and over and over a lot. But usually it's only like $150. But still, that's a lot. I've got a tablet on there. I've got my cell phone on there. I've got unlimited, minutes, but I do have, I think, only 15 gigabytes of data or something. I don't know, but it goes fast, right? So, but any portion, literally I use all that for my business. Like I said, if I talk to anybody in my family, they're all related to my business. But if they weren't, then I'd have to figure out the percentage. And the people I'm talking to, just on a fun, personal level, to who I'm talking to on a professional level. And what's that percentage? And that percentage of my phone bill that I'm using professionally for my Mary Kay business is a deduction. Literally, I write off 95% of it. I could probably write off 100, but I'm just nice. And I want to give the IRS that 5%. Okay, so you can figure out your cell phone bill. That is huge, you guys. I know you're all paying at least $100 for your cell phone bill. Why don't you get that $100 a month back from the government? That's almost $1,200 a year. Oh my gosh. Get your billions back, America. I'm going to sound like HR Block. Get your billions back, Mary Kay beauty consultants. You're too smart not to. Get your taxes together. Keep all of your receipts for everything all year long. Get good at organizing them. There's great tax information online as well. Find an accountant that knows what they're doing, can help you do in-home based taxes for your business, and just see what happens this year when you write off all the expenses that you're entitled to because you're an in-home business owner. You will be floored. I know quite a few of our consultants have gotten, just in their first few years, $4,000 to $5,000 back. Last year, Jeff and I saved us $12,000. This is no joke. Are you saving $3,000 to $4,000 a year? Probably not. Most of us aren't. If you wanted to save $6,000 a year, you'd have to be putting away $500 a month. $500 a month, clearing it, putting it right into savings, okay? Your tax shelter for your business is huge. It's a way to get that money back. It's like savings. It's like a savings account to do your taxes properly and get back all that you're entitled to. So I just counted up my inventory. I have a full store. I've worked at building it over the last 13 years. I have about 8,000 in wholesale that I had as of December 31st. You want to count up your inventory. What did you have? And I'm going to give you real quick the little checklist of all the things that you want to make sure that you have done for your end of year. So number one, you want to count all of your inventory, all of your sellable inventory, not demos, that's separate, but all of your sellable inventory that's still on your shelf as of December 31st, okay? Tally that off. Oh, the easiest way to do that is go in Mary Kay and like create an order. I usually start, you know, with our little order forms that you get in the Applause magazines that have a list of all the products. So what I start with is I just go down every single item and I write out how many I have of each. And then I take this little form and I sit down in front of the computer and I pull up In Touch and I pull up a new order, like I'm going to make an order to the company. And I start plugging in all this information. Let them do the math for you. So if you just create that order with all of your inventory and print it off, and you can name it at the end when you save it, it'll let you name it and just name it. Birdie's end of the year inventory 2016. Okay, and you print that off and you make sure a copy of that gets in here for December, the end of the year. ProPay fees. Oh, that's another one. If you have ProPay fees need to get printed off, and they have, like, you can print the whole year at one time. Interest on your credit card. If you used a credit card to purchase your inventory and there is interest, that's why it's smart if you're going to use a credit card to either get that Mary Kay Chase card or have one credit card designated for your business that you only use for Mary Kay, because when you're separating out interest charges for different things, it's really hard. And when you intermingle your business funds with your home funds, if you do get audited, they can audit everything. If you have kept it strictly business, then they can only audit your business. They won't audit your personal life. So that's something to think about too. Do you have a separate checking account? Do you have a separate savings account? You've got your separate, your ProPay and any ProPay fees, whatever it costs you to have ProPay, whatever it costs you to have your website, that's a deduction. So, oh my gosh, yeah, there's a cost to doing business, but as a business owner, it all comes back to you. It's like free. You guys, I pay $60 a year to have a website. $60 a year is coming back to me in my tax return. It's like I didn't even spend it. It's so awesome. And that website makes me thousands of dollars. Do you understand? Whatever you invest in your business comes back to you in your tax return. So invest in your business and don't be afraid, whether it's product, whether it's getting your website set up, whether it's getting ProPay, get your ducks in a row, get your office set up. You are worth it. You're important enough. And this is how you build wealth for your family. Having an in-home business is how you build wealth for your family. Say it with me again. Having an in-home business and tracking it wisely is how you build wealth for your family. Don't let a single dollar go. Get your billions back. I'm telling you, it's awesome. Okay, so you're going to create an order for your inventory on In Touch. Print that off. That's going to be all your inventory. You're also going to there'll be a copy of your income advisory statement that will be available to you after February the 2nd. So look for that on In Touch. It is under business tools, reports, and then income advisory statement. You will not get a 1099 from Mary Kay unless you earned over $500 worth of prizes and commissions. So anything that you did earn or what could be seen as income is going to be in that income advisory statement, along with anything you purchased product-wise, Section 2-wise. There's tons of information in that income advisory statement. Definitely print that off, and you can use that to fill out your Schedule C. Schedule C is what you're going to fill out to do your taxes. You can request one from your tax office. You can print one off from online, and that's just going to be that separate sheet of paper that has you list all of those deductions that you're entitled to. And I'm going to type all this up and send it out in an email so it's not so scattered for you. I just want you to hear my voice. It's so exciting to be able to get this money back in your tax return when you submit it, and you treat your business like a business, and don't be afraid to claim these deductions because you're 100% entitled to them. Yes, yes, I am entitled to get my billions back this year. That's right. Okay, so your income advisory statement, look for that after February 2nd. Measure and record the square footage of whatever you're using that you're claiming as your Mary Kay office, your Mary Kay exclusive office space, the square footage, so you know what percentage of all your in-home expenses that you can claim. Document your ending mileage as of December 31st on your vehicle. And I actually heard a tip last night in my training that claim every vehicle. Like, take the ending mileage of every vehicle that you might drive that might be available to you to drive for your business. Now, I typically, I mean, I could drive to Suburban, but you know, I really just only drive my Mary Kay car, so that's kind of easy. But yeah, you're going to think about all the mileage. You're going to look back through your date book, and your 2016 date book is a tax document. That's going to go in that 12-month accordion folder, and you want to get a new date book for yourself for 2017. So you're going to put that old date book in there. That's going to be a reference. You're going to check back through there of mileage. If you went to parties, what was the mileage there? If you went to your meetings, what was the mileage to and from there? All of that. So you can use your date book to look back, and that is a tax document. So document your ending mileage on your vehicle so the government can pay you 54 cents a mile that you drove this year for your Mary Kay business. How exciting is that? And that's about it. Like, gosh, if you have any questions, let me know. I'd love to talk you through any of it. I know I shared a lot of information, but yeah, you're going to get a new date book. You're going to get a new 12-month accordion folder, so you can keep all of your receipts in here for this year, all of your sales receipts, all of your invoices from your orders, all of any expenses and sales, and then that's going to all get loaded up. And I have two really good Excel spreadsheets that break it down by quarters for you to enter everything in, and I'll send out that in an email as well. So I hope you heard some great information. Thanks for hanging with us, and definitely do yourself the favor and do your taxes with your Mary Kay business included and all those deductions. And I want you to see how much money you can get back for your family this year. It's incredible. It will blow your mind, literally. So have fun with that. And I will see you. We'll be back next Monday, and I'll have some more tax tips too. And if you get any questions to me, I'll answer your questions in next week. So we'll do another 30 minutes next week as well. Thank you for watching, you guys. Mwah! Love you.